Hi, I'm David Stein, and this video is on how to invest your money. I was prompted to make it based on a conversation I had the other day as I was getting my hair cut. My stylist asked that very question, how do I invest my money? But he asked it in a way that suggested he thought he needed to be initiated, that he needed a mentor, that there were secrets to investing that somehow he had to find out, but he didn't know how to find them out. Well, the reality is everyone can learn to invest, and I made this video to at least get you started on that journey. And to start learning to invest, you need to figure out what kind of investor you want to be, because there's three ways to invest. The first is called active management. Active management means trying to predict specific events and profiting from them. So if you're an active manager, you think something's going to happen, that you have some type of informational edge, informational advantage that nobody else knows, and so you go buy the security. It might be Apple. You think the market is underestimating the impact of the next iPhone refresh on Apple's profits, and so you go out and you buy Apple, and if the phone is that spectacular, then the stock market goes up, or the price of that security goes up. That is a very challenging way to invest. I spent years going to New York and other places trying to find and research those managers that had the skill to predict the future. That's why I liken that to trying to predict going out, if you're thirsty, going out into the rain and trying to predict when a specific raindrop will fall and catch it. Not everyone can do that. So that brings up a second way to invest. That's the complete opposite. It's called passive management. And there, you're buying the entire market through an index fund or an exchange traded fund. So you're not trying to predict the future at all. But that way, passive investing requires nerves of steel because you're in the market completely when the market is falling. So you ride the market down, but then you ride it back up just like a roller coaster, and you're holding on for dear life. That's like going out in the rain. Instead of trying to predict when a specific raindrop will fall, you just stand there and you get soaked and you get wet. You quench your thirst, but you get pretty dang wet. That's why I focus on a third way to invest. I call it dynamic investing, and it's much more systematic. I liken it to holding an umbrella to protect yourself against the rain, while also holding a pitcher to collect raindrops to quench your thirst. How do you go about dynamic investing? Well, instead of trying to predict the future, you focus on what's not going to change. In other words, what is constant in an ever-changing world? And there's two constants. One, endless surprise. Investors, companies, people are always being surprised by things they didn't anticipate. And then markets and investors overreact to those surprises. They get fearful or they get greedy, and that creates opportunity. Dynamic investing involves adjusting your exposure over time based on the valuations and based on the level of fear and greed in the market. I share how to do that in a free ebook I have. It's called How to Invest Your Money. And you can get that ebook by clicking the link embedded in this video or below the video, and it'll take you to a site, howtoinvestyourmoney.co, and there you can input your email and you'll get that free ebook. It has 10 investment rules on how to invest. My best ideas on what I've learned about investing to be able to approach it from a more dynamic risk management arena. Now, you'll also be able to get my investment newsletter. It's a free newsletter that comes out once a week where I share my best ideas of what I know about investing and continue to learn about investing, because investing overall is a journey. I invite you to take it. Please sign up for my free ebook and newsletter. Thank you.